Hey folks, and welcome to the Pipnotic Symposium for the 1st of August 2021. Today it's the 1st of the month, and so please remember to update your product keys for all of the products that you're using. Also note that it will not take effect until the market opens early Monday morning, and this is because that the server time on your MT4 terminal is still the last minute of the last day of last month. And so when the market opens on Monday morning, then you will all of a sudden not be able to see your software. So this is why you have to update it before Monday, and this is why you can still see it now, even though we're on the 1st of August. Okay, today we're gonna go back to the basics, and we're going to talk a little bit about some of the stuff that we talked about. I mean, way back. I think we're going back several years, and this is the focus on the major flows. And we have some tools in our toolbox that enable us to do this. And so the idea, my whole motivation to focus on two things: currency strength, and the second thing, liquidity distribution in the form of buy and sell zone, supply and demand, is because some currencies, some assets in this situation, we're going to be looking at currencies because of the currency strength software. Some of these assets are not moving, and so it doesn't make sense to trade them. And so using the currency strength, as we'll see in just a moment, is a really nice way to help filter out currency pairs that aren't moving. Because sometimes you'll have a currency pair that's just moving sideways because there's an agreement in the strength between the relative strength of one currency relative to the other. And so it's most important to focus on the currencies that are actually moving. Okay, so let's look at an example. Okay, so if we look at this configuration, this is a simplified version of what I used to do in the old days, where I'd have my currency strength dashboard on this side of the chart, and I would have my supply and demand charts on the left side. And here I have the daily chart, the hourly chart, and here we have the 30-minute chart. It doesn't matter what time frame they are. This is the trend, the long term, this is the medium term, and this is the short term. If you're longer term trading, then you could put this to the weekly, you could put this to the daily, and you could put this down to the 4 hour, the 1 hour. Okay, but we're just doing it this way because it's nice and simple and pretty clear as to what the flows are doing on the daily. And then we have the short hour. This could be maybe the 4 hour, and this could be maybe the 1 hour or the half an hour. And the good thing about doing it this way is it really gives us insight into what these different time frames are doing relative to one another. So if we look at the currency strength on the longer term, I mean, what is moving? Where do we have a divergence between the currency strength of two currencies? And you can see pretty clearly here we have a very weak Australian dollar. And so what you can do in a situation like that is you can open up a text editor like I've done here. I'm using Notepad++, it doesn't matter what you use. And here I'm looking for currencies to sell. And so when you see something like this, you might want to consider doing something like this. So we write sell here, and we look at the currencies that are weak and getting weaker. We have the Australian dollar. And that's pretty much it. We have the Kiwi dollar. We could consider that. We can put that on there just in case. Kiwi. And then we have the other ones, which are the buy. So which ones are moving higher? And we have the Swiss franc. We have, what else do we have? That's nothing really else. Maybe the British pound a little bit, but we'll just leave it at the very clear and obvious currency pairs. So we actually have two currency pairs that we can trade. We have the Australian dollar Swiss franc and the Kiwi Swiss franc. Okay, so if we look at those on this chart, first we'll go to the Australian dollar Swiss franc. Here, I drag this onto the chart, and this should be moving down very quickly. So we'll let that load. Okay, so here you can see very, very clearly what's going on. We have, this is a daily chart, price is just racing south. You can see it's really selling off. Okay, we've taken out a couple historical areas here, and now we are looking for price to continue to move lower until we reach some demand, which we don't have until much lower. Okay, and so keeping this in mind, we want to be looking to sell. And so now this is when you go to the shorter time frames, or the small time frames, and you look for areas to sell at. And you'll notice as well that we don't have a lot of pullbacks. This is probably the only pullback that we had, and currently price is just moving lower and lower and lower. But if you go to the smaller time frames, maybe the 15-minute or the 5-minute, these big pushes lower will materialize in the form of pullbacks on the smaller time frame. So if you have the daily, like a lot of daily selling on the 50-minute, the 5-minute, and 1-minute, you'll see a lot of pullbacks because this is how price moves. And we had a pretty nice one here, and this was essentially the trade where we had, keeping in mind that we are selling because of this on the small time frames, we want to look at these pullbacks, and we had one here. This is just a very clear sell-off at a nice area of supply that is in line with the daily trend here, as you can see. Okay, so let's have a look at the other one, which is a Kiwi Swiss franc, just here. And this is maybe doing something similar, maybe less dramatic. Yeah, okay, so you can see here that we have pretty much doing the same thing as before. Price is slowly wriggling south. On the 4-hour chart, you can see that we're also doing that. We had this nice 4-hour area of supply that was tested, and then price left, and alignment with the Kiwi Swiss franc, as you can see. And so you would look for areas to sell here. And on this time frame, actually on the 4-hour chart, the trade already happened. There was a trade there, but assuming that you didn't get into that trade for whatever reason, now we're looking for trades on the small time frame. So let's have a look here, and you can see that, here we had a respected level. Let's zoom out a little, where price tested. I'm just going to use a rectangle. It's a bit easier and clearer. So we'll put in a rectangle here. The reason this is important to us is because we tested it once, twice, 3 times, many times, and then price finally went through it. And the area that removed that is here, right here. Without spending too much time, this is what we have right here. Okay, so this is where we would expect price to turn and bounce at. And even though we have divergence on the small time frame, this is just telling us that we're gonna maybe revert to the mean, keeping in mind that we are still selling. We have a downward sloping trend line as well, connecting the highs on the 4-hour. We are still selling off, and we have a very nice release from this area of 4-hour supply, and this would be a very nice departure. Okay, this is the area that was tested many times. This area removed it, so this is the trade just here. Okay, and the cool thing about using currency strength is that it prevents you from messing around with. Let's have a look at Euro Singapore dollar, just to have something to compare to. And this currency pair is probably not doing a whole lot. So let's look. Here it is. Okay, and so here you can see, as we can see on the currency strength, that it's range bound. You see, it's just moving higher and lower, higher and lower. It's just stuck in this range. And so in a situation like that, you can trade either way, selling at the highs and buying at the lows, but being very careful about doing this. And I say very careful because we have an area of demand, price tests it, and so people who are looking to trade support and resistance would typically look for price to react to this area. But the problem is price will often run lower in an attempt to find liquidity required to drive prices higher to the opposing side of this range-bound market. And this is very, very normal behavior. And this is because the markets need to find in this situation buyers in order to attract a buying pressure to drive price. Okay, and so we have this area here. The big banks, or the people, not necessarily only the big banks, but the people who are also mindful of what's going on, they know that people are going to have their stops located around here, around this area. And the reason this is important to them is because if they have a big order that needs to be filled and there isn't enough liquidity available, well, then they're going to try and drive prices lower in order to remove these stops here. That will be required in order to fill these orders, and so they're going to drive price lower. They're going to remove this level, take out these stops, and this one, and maybe go a little bit deeper and take out all the ones at the very, very low here, because these are the ones that are required in order to drive price north here. Okay, so this is very normal behavior. It's not the market working against you. This is very, very normal behavior. Okay, so now moving from using currency strength to select currencies to trade with one another, to using the same information to find range-bound markets. Currency strength plays a very, very important role when picking assets to trade relative to one another, in this case a currency. And this is very important. So what you would do typically is you would wait for price to reach this area, and you would wait for this to happen, and you would wait for price to move back. And so when you look at something like this, you can go to the smaller time frame. Let's just see where that is. I've got the 4-hour chart here. So this is where it is. This is where you would see, this is liquidity exploration, where price drives below these lows. Let's mark off the level so we can see it clearly on this time frame as well. So this is where it is. We're going to put a vertical line as well. We're going to go to the 4-hour. We're going to go over. Okay, we're going to look for this to happen. Price goes like that. And this is the big money driving price lower. So they're taking contrarian trades, moving price lower to scoop up the liquidity available here to fill the orders that represent their real intention, and that is to drive price higher. And you can see this happening from just here. When price comes down here, we know that we have stops here, so you know that there's going to be a lot of there's going to be a lot of liquidity available at this area here. So when you see something like this, and then you see a big pop north, we have a level formed. This is a beautiful area to buy at. Price goes up, we poke into the level, and we go up. Okay, this is typical market behavior. Okay, so this is how we can use currency strength to find trending markets, but also to find markets that are range bound and markets that we would trade levels with, using liquidity exploration as one of our main tools for identifying these price points where price is going to be pushing lower to attract buyers, pushing lower to release the stop losses into the market that will be used, the liquidity of which will be used to fill the buy orders. Okay, this is very, very normal behavior. Okay, well, I'm going to leave it at that. If you have any questions, please drop them in the comments, and thanks for watching.